What is up, you guys? Pete DiCarlo here, and today we're going to take a look at Docusign, right? I've had a couple of people ask me today about this company long-term after it has dropped nearly 42%. It has actually been downgraded by about 5 different companies and different analysts. The rest of this, basically, the Q3 was terrible. Terrible numbers. Been downgraded across the board, but it is starting to hit a very attractive price. Just today alone, we are down 43%. We're going to talk about it. We're going to go over if I think this is a wise investment after this type of a sell-off. And we're going to go over if I would take a position. So hit the like button, guys. Subscribe to the channel if you haven't already. Go ahead and check out our Discord. The link is in the description. It's completely free. It is one of the best free trading Discords out there. You get access to a ton of free content. Not only do you get access to the entire group, which you get to trade with some of the best people out there and some of the friendliest people. We're not toxic. And the best thing too is you also get access to free courses, free live streams every single Sunday, and one of the best technical analysis options and dark pool bots out there. Nobody gives these things out for free, especially these bots specifically, because they do cost a lot of money, but we're giving it out to you guys for all the support over the past 2 years of this channel and the past 1 year of our other channel, Traders Helping Traders. So let's talk about Docusign. If you guys don't know what this company does, basically they provide cloud-based software internationally to the United States. And basically what they do is allows you to use complex forms, use you to actually use guided forms. Like if you've ever, one of the best ways to explain it actually is like if you've ever applied for a house or for a loan, for a mortgage, and instead of having them send you like 50 pages worth of documents for you to try to figure out where to sign, basically what it does is you would get an email with all of the documents there. You just click the next button. It sends you to the next area for you to sign. You press one button, it signs it for you, and it just makes gigantic documents and contracts 1,000 times easier, stores them all in the cloud so you can pull them out whenever you need to. And they work with a ton of different companies. And fundamentally, this company, without the financials and everything we're going to talk about, but fundamentally, this company sounds like it would be great. Kind of like a Dropbox, because number one, it's like online storage. Like storage companies in general are some of my favorite things because, think about a storage facility where people store their crap and then they pay for it each and every single month. Same situation with the Dropbox, and same thing with Docusign, where all those documents are actually saved within the cloud and it makes life easier. Now, so let's talk about some of the risk versus reward before we start. There has been a ton of insider selling within the past 3 months, so that is a fail as far as the checklist. Shareholders have been diluted a lot over the past couple of years, which for a lot of people, they really don't like that. However, for me, it depends on the dilution. I have to look more into how much has been diluted, but I don't really mind when we have dilution of shares to a degree, because I'd rather a company offer more shares to the public market so they can raise capital and pay off debts as opposed to going to a bank and just bring on more debt. So passes, are they forecasted to achieve profitability? They were before today, but they were forecasted for the next 3 years. Their growth is actually pretty crazy when we start to talk about it, which is very good. They are actually expected to grow over 102% per year. However, one of the things that we're going to see as we start to, get down into this area is really they've brought on a lot of debt. So right now this says they're trading at 233. They are not trading at 233. They are actually trading right around their fair price of 135. So they have a fair value of 131. Sifting through everything, I would say the fair value for this company is probably about $120, $115. And in order for me to personally buy something, I want to buy it at half of fair value. But for me, I'd be buying this company if it dropped to $90. That's really what I'd be looking for. If we look at the charts, it looks like it could drop to 95. So if this hits 95, I will very much go looking for it. So basically, if you're here, you don't want to watch the rest of the video on why I believe this, but you just want the quick answer, $95 to $90 is where I'd be looking to purchase this. The price to book is $217. It's definitely not that right now, but it was $217, probably about $140, $150 right now. So it is trading at fair market, was above fair market, trading at fair market right now. Price to earnings growth is not applicable. Price to books growth is not applicable because they don't have, they're not a company that actually makes money. Like, yes, revenue is growing, but they are still burning through a lot of cash. We'll talk about that later. Future growth, they get a 6 out of 6 check. This company is actually pinned to grow. They did lower Q3 guidance or Q4 guidance on those Q3 earnings, but as of right now, before this, they were actually poised to grow pretty good. Future growth, 102% versus the industry's 18%. But one of the things I really want to talk about when we get to this company is the financial health, because it's not looking too hot. So one of the biggest issues here is short-term liabilities. So for any of you guys who don't know the difference between short-term, long-term liabilities, and you're looking at a financial statement or a balance sheet, short-term liabilities and short-term assets, basically a short-term liability is something that has to be paid within the next 12 months. So that could be like accounts payable, accounts receivable. It could be something along the lines of just interest on debt. It could be anything that has to be paid within 12 months. You can see right now in short-term assets, they have $1.18 billion. Short-term liabilities, $1.21 billion. So more liabilities than they have assets, which is never, ever something I want to look at or invest in. Now, looking at long-term assets, we have 1.17 billion with long-term liabilities at 934 million. Once again, more assets, but barely long term. So that's anything due within the next or the past 12 months. So you can see debt equity history and analysis not looking too good either. This company has a ton of debt. Looking at the balance sheet here, you can see long-term assets, cash short terms. You can see here debt. So right now we're looking at like, this is a better breakdown going back up here for this financial position analysis. This is what the debt looks like when we just see, assets to liabilities, but this is actually a breakdown of it. So if you look, like, debt is $732 million on top of 1.4 in other liabilities. I really, really, really don't like the financial state that this company is in. And it's kind of like a wish, which if you guys have been watching the video we did recently on context logic, is kind of the same situation where I like the company, it's poised to grow, but like, they are bringing on so much debt that it's just not great. I mean, even their short-term financial position is significantly better. For me, I wouldn't touch this company at this price. I think that they do have a decent chance of going bankrupt, unfortunately, and I would not touch it unless it went to 94. And if you were going to touch it even at $94, to be quite honest, I would say I would only put in what I was willing to risk entirely in case this company does go belly up. I don't really know if they will, but I still think that that at the end of the day, this is way too rich of a price, and I'd be waiting for like $94 to like $80. Hope this video helps, guys. Hit the like button, subscribe, go ahead and check out the Discord. The link is in the description. You guys get access to all the free content we spoke about before. Also, if you guys want, you can go ahead and check out the upgraded role in the Discord. So if you want access to all my long-term investments, all of my trades, as well as our upgraded bot, you can do so for $20 per month, and it is completely free to start. And if you want, you can join our private mentorship group. I've opened up 10 more spots. So once those spots fill, I'm not going to talk about it anymore for the next month. Basically, you get access to every single trade that I take live as soon as I take it. You get to live stream with me and my team every single morning. As soon as the market opens, you get access to our 60-hour course library content as well. You also get access to our private Discord and direct access to myself. So thanks for all the support, guys. Have a great day, and I'll see you tomorrow. Peace.